Hey guys, it's Big Mike. What we have here today is something that happens every now and then, and happens often enough that I really want to talk about it on this video. Normally I get this type of a message in private. This particular person made a post to his journal on BMT. I'll quickly just read what he wrote. He says, this is a post he made. Real blow up, self-fulfilling prophecy. I was preparing for the worst and I got the worst times 3. I tried trading without stops, trusting myself to stop myself out at bad price action levels. I did not stick to my scalp rules. I went for swing trades when I'm not versed well enough on the 5-minute on crude. I overtraded my number of contracts. I stopped out, but the losses were just too big for my account. I should have stayed on sim another month while trying to integrate, changing a few habits. Maybe should have traded the micro 6C or beans or something instead of oil, which is hard to trade. I became numb and was just giving money away. Numb. I kept revenge trading again and again and had more losers. I had my rules on a sheet in front of me, ignored them. I lost a big chunk of my live gains last month, just gave it away in 35 minutes. Dang, that really hurt. Made it the worst day of the year for me. Makes me want to read those books again on trading losses. The high-frequency trading computers probably are front-running me. Every crude 2-minute bar looks like it couldn't make up its mind if it wanted to be a bear or a bull bar or a spike bar. So it looks like there are computer traders at the 20 and then from 50-tick time frame or whatever. What am I going to do? I'm out of here. Out of this journal. Too much pressure or something. Journal here is not helping me now. I may go back to sim for months, may keep my own record in journals, or that's the end of trading for me. I think I've shared enough of my thoughts and thinking behind my trades that it will be useful to others. If I come back to this journal, it'll only be if I've made the dream in trading. What a lottery dream that it recently wasn't. Parting words. Trading is the toughest game around. The edge is fleeting. Get out when it turns bad as early as you can. While one can win, the guilt of winning or karma or whatever, as much as I'm entertained by TMFT, it's a user on BMT, I don't enjoy some of his sarcasm and jokes, but he was right. It is easy to lose money. There are forces both inside and out that make it easy to give a lot or a lot more back to the markets. Remember what they hardly say about Livermore. He lost most of his fortune at the end of his career. Look up what happened to him on YouTube. So this guy lost 141 ticks Thursday, April 5th. Here's a few things that I want to say about it. First of all, Thursday, April 5th is we're going into a holiday session, Easter Sunday, Good Friday, and that's probably, you need to be on the lookout right there for a range bound or choppy day. Okay, it's pretty much a given. Second thing is this guy is trading crude oil, but does not seem to yet be consistently profitable. So I always say crude is not a beginner's instrument. Crude is not an instrument that you cut your teeth on. Crude is not an instrument that you learn how to trade on. You know, futures are hard enough. Futures themselves are not beginner's instruments. I know a lot of people run to futures. And I like futures, but I don't think that they're the right instrument for everybody. And to then take it even further and start trading crude is just unbelievable. It's not a good idea. And I try to emphasize that as much as I can, but you know, putting myself in this guy's shoes, it's hard. It's hard because you see all these charts and all these other traders around you with all these, you know, huge trending moves with crude, you know, 100 ticks up, 100 ticks down. And it kind of draws you in. It makes you think that you really want to trade this instrument because it moves so well, you know. A lot of beginner traders are drawn to fast-moving markets. Okay, so the second thing I want to say about this guy is that he is a smart guy. I don't know him personally, but I do know his posts on the forum over the last year. He's written some intelligent posts. He's a smart guy. And yet here we are. A blown account, it would seem. So, let's see what he says. He says self-fulfilling prophecy. Well, the first thing that comes to my mind is, you know what? It kind of really was, right? Because you set yourself up for failure. You've got to give yourself a fighting chance to be successful as a trader. And that does not mean that you go in and you start trading crude and you start trading well beyond your account risk tolerance of like 1 or 2% of your account size. And then you also aren't using stops. You decided to trade without stops. I mean, come on. Who was it that I think one of the turtle traders said that everyone gets what they want out of the market. And I mean, this is definitely a case of that. So I encourage everyone to come up with a game plan of how you can actually be successful and how to position yourself for success. How can you preserve your risk capital? How can you make sure that you stay in the game for a long period of time while you continue to gain experience? Give yourself a chance to become a better trader than those around you. That doesn't happen overnight. That doesn't happen in 1 year. A lot of times it doesn't happen in 2 years. It doesn't happen in 5 years. Just like you don't become a brain surgeon in 5 years. It takes a long time. It takes a long time from beginning to end to know how to do something this precise and this difficult and do it better than all those around you, which is really what is required. Okay? Let's keep looking at what he says. He says that, basically he apparently changed his method on the fly and stopped using stops. He didn't scalp any longer. He was then going for bigger swing trades. I'm looking at my chart real quick. Looks like crude moved 200 ticks. 200 ticks. So that's a pretty normal day on crude, I guess. Revenge trading. He was revenge trading. Kept trading again and again and again. So that's another big sign that you've lost control. And I know that it's hard. I know that a lot of people will lose money, and then instead of focusing on preserving the capital they have left and live to fight another day, no one seems to, or very few people seem to be able to go there. Most people just automatically and very quickly jump to this "I got to make it back" mentality, which is why this gentleman probably is stuck on crude, because he probably lost a lot of money on crude, and now he needs crude. He needs that volatility. He needs those huge moves if he's ever going to make his money back. He is going to discount trading micros. He's going to discount trading spot forex because come on, that's the kiddie pool. I can't make all my losses back trading 10 cents a pip or $1 a tick. That's never going to work. And that's just the wrong mentality. I encourage everyone to forget about the losses that they've already sustained and to start focusing on how can I become a successful trader in the long term. What can I do to make sure that eventually I am going to be well positioned to be a consistently profitable trader? And my advice is that you've got to give yourself a chance. You've got to trade no more than 1 or 2% risk per trade of your account size. If your account size is $10,000, you cannot risk more than $100 or $200 max per trade. That means on oil, it's like 10 to 20 ticks. That is not enough to trade oil. Okay, that happens when someone coughs and oil shoots up 10 ticks. All right, so oil is not the right instrument. Even a slower moving instrument like the euro or the Russell or the mini Dow or whatever, those are not the right instruments with a $10,000 account either. Not in my opinion. You need to be looking at micro futures at the most on a $10,000 account, and you need to be looking most likely at spot forex really until you can get up to at least a $25,000 or $50,000 account. Now, a lot of people automatically just say, "Oh well, I'll just go ahead and fund with $50,000. I can do that. I've got it." That's not the right answer. It's not about just throwing more money at it. Don't do that. Let's just be smart. Put a reasonable amount of money into your account. This is money that you are 100% prepared to lose. This is not money that's coming from your savings account. This is not money that you're needing to pay the bills. This is not money that you need to turn into income. This is money that you are basically totally fine with just throwing it out the window and seeing what happens. Okay, trading is a very risky game. The second thing is you can't just decide 1% or 2% of your account size and then set a stop arbitrarily. The market doesn't give a flip how big your account size. Oil doesn't say, oh, well, this gentleman has a $10,000 account, so let's be sure to not move more than 10 ticks because that's all he can afford. No, your stop is based on market price action. It's based on whatever your methodology says, which is usually some type of a recent support and resistance area in the market. And then you have, a little bit of cushion that you add to that. And that is when you're willing to say, you know what, this trade was wrong, which is perfectly fine. It did not work out. I made the wrong call, the wrong decision, the wrong direction on this trade. And I'm going to now get stopped out. Okay? You need to decide what the market is telling you that level is. And then you do some math and you say, you know what, on average, that level is 50 ticks away. That level is 200 ticks away. Whatever it is, based on your time frame and your methodology. Then you can decide, okay, if I need a 50 tick stop, then 1% of my account is, X, and therefore I need to be trading, spot Forex at 10 cents a pip, or therefore I can trade micro futures, or therefore I can trade full size, E-mini S&P, whatever. It's up to you and your account size after you've set a reasonable stop as dictated by the market. One other thing I'll see on stops real quick, all too often I see people enter a position, get stopped, and then immediately re-enter the same position, the same direction. Why are you setting a stop at a level where the trade is still valid? If you're willing to get right back into that trade in the same direction, then that trade is apparently still valid. So why did you set a stop there? Your stop is set where the trade is no longer valid. Okay, let's keep reading what he says. He says that the HFT computers are basically out to get him. That's a little bit true, I guess, because everybody in the market is out to get you. Everybody is trying to, take your money. That's just a function of the market. And HFT, high frequency trading is doing it quicker than others, but they're not out to get you. You can't look at the market like that. That's just not how it works. CL couldn't make up its mind. Is it going to be a bear? Is it going to be a bull? Well, you know what? That's not CL's fault. That's not crude's fault. That's your fault for trading it or trading it over and over and over. Not everyone's perfect. Clearly, you can enter a trade, and then after you get in the trade, the market can just go completely range bound and be completely chop, and there's nothing you could do except either set in the trade or just get out the best you can. But what you don't want to do is just sit there and trade it over and over and over, and get torn up and butchered inside a chop. I see a lot of beginners make that mistake, especially if you're the type of trader that's reversing your direction throughout the day. If you're long, right now, and then 10 minutes later you're short, and then half an hour later you're long again, and then an hour later you're short, you're going to just get cremated. That's a rookie mistake in my opinion. Okay, he says he's out of here. This journal is done. It's too much pressure. So now, guess what he's doing? He never once did I really see him take accountability for anything that's happened. He said it was a self-fulfilling prophecy, but he seems to be blaming other things. He's blaming the HFT bots. He's blaming crude for being in chop. He's blaming the pressure of the journal. The journal's not helping him. It's just that's just not going to work. Trading is about responsibility, and a lot of people really, really, really suffer with this. They just can't take responsibility for their own actions. I think that's why a lot of people rely on a bunch of indicators. I think that's why a lot of people are so drawn to trading rooms and signal calling services, because it's not necessarily because these people think that those trading rooms are actually worth a hoot. It's because they like, somewhere deep down, they like that ability to blame someone else. If it's just you and you're not listening to someone else give you trading advice, and it's just you and the chart, okay, and you have no indicators, it's just you and the price on your chart with no indicators, no trading room, then really you run out of places to blame. I mean, don't worry, you can still find some. Your internet went down, your computer's slow, your platform crashed, your broker's slow, whatever. You'll find some reasons. But the thing is that you got to start eliminating those things. If your internet is flaky, then guess what? You shouldn't be trading until you fix that. If your computer is slow, guess what? Don't trade till you fix it. If your platform crashes, guess what? That's your problem. Why are you running the platform if it crashes? You've got to accept complete responsibility. Everything that you do as a trader is your responsibility. Take accountability for all of your actions. It's only then can you start seeing, or start admitting to yourself or something that you gotta be able to visualize. You gotta be able to see, I made the mistake. That was on me. It's not on the market. It's not on the HFT bots. It's not on Goldman trying to stop me out. It's not on any of that. That was me. It's all me. All right, guys. So this video is already 16 minutes, so I'll try to wrap it up. Again, this guy is a typical trader. He is intelligent in his posts. I have nothing against him. I feel very sorry for him. I've been there. I've seen hundreds of other people be in this exact position, and I just wanted to talk about it for a few minutes and hope that someone can benefit from what I'm saying. And I also encourage this guy to continue posting, continue his journal. It's so easy just to say, oh, I'm done, I'm fed up, see ya. Well, what is that going to prove? I mean, if you want to stop trading, then that's fine. I'm not here to say don't stop trading, But if you want to really be a trader, if this is a goal of yours in life, then if you want to increase your odds to actually succeed, I suggest that you continue journaling in some form or fashion, especially this gentleman who definitely has a problem with accountability and has a problem with basically following his own rules. You need something to hold yourself accountable, and a journal can really help you do it. All right, guys, I hope it's been useful. I'll see everybody on the forum.